Question 1. A business owner, MS Taylor, has a general liability insurance policy that includes coverage for bodily injury and property damage. During a client meeting at her office, a visitor trips over a loose carpet and injures their ankle. What is MS Taylor's primary obligation regarding this incident under a general liability policy? A. To immediately compensate the visitor for their medical expenses. B. To report the incident to her insurer as soon as possible. C. To remove all potential hazards from her office to avoid future claims. D. To deny any responsibility and refuse to pay for the visitor's injuries. Answer: B. To report the incident to her insurer as soon as possible. Explanation: under coverage of a general liability insurance policy, the business owner has a responsibility to report any incidents that may lead to a claim. This includes notifying the insurer promptly about the injury to the visitor. This obligation is crucial for ensuring that the insurance company can investigate the incident and provide necessary coverage for any claims that may arise. While MS Taylor may be concerned about potential hazards in her office, option C, the primary step she must take following an incident is to inform her insurer. Options A and D are incorrect because immediate compensation is not her obligation without a claim process, and denying responsibility could jeopardize her coverage. Question 2. In the context of workers' compensation insurance in Wyoming, which of the following statements is true regarding employee coverage? A. Workers' compensation coverage is optional for employers in all industries. B. Employees are automatically covered under the employer's workers' compensation policy regardless of their job classification. C. Employers must provide workers' compensation insurance for all employees unless they qualify for an exemption. D. Workers' compensation policies cover only accidents that occur on the job site. Answer: C. Employers must provide workers' compensation insurance for all employees unless they qualify for an exemption. Explanation: in Wyoming, employers are required by law to provide workers' compensation coverage for their employees unless specific exemptions apply, e.g., certain types of small businesses or self-employed individuals. This ensures that employees are protected in case of work-related injuries or illnesses. Option is incorrect because certain industries, such as construction, have mandatory coverage requirements. Option B is misleading as coverage can vary based on job classifications and the type of employment. Option D is also incorrect because workers' compensation can cover injuries that occur off-site as long as they are related to job duties. Question 3. Scenario: Mr. Johnson operates a landscaping business and recently secured a new contract with a large corporate client. Before starting the job, he realized that his current commercial auto insurance policy does not include coverage for hired vehicles. To mitigate risks, what should Mr. Johnson do? A. Purchase additional hired auto liability coverage to protect against potential claims. B. Rely on his general liability insurance, which covers all business-related activities. C. Inform the corporate client that he will not be able to fulfill the contract due to insurance limitations. D. Continue with his current policy, assuming that no accidents will happen during the job. Answer: A. Purchase additional hired auto liability coverage to protect against potential claims. Explanation: Mr. Johnson should purchase additional hired auto liability coverage to ensure that he is protected when using hired vehicles for his landscaping business. This type of coverage provides liability protection for vehicles that are rented or hired, which is crucial when working with corporate clients where the risk of accidents may increase. Option B is incorrect because general liability insurance does not typically cover vehicle-related claims. Option C is not a viable solution as it may impact his business relationship and potential income. Option D reflects a risky approach as relying on luck does not provide any real protection and could lead to significant financial loss in the event of an accident. Question 4. In Wyoming, a business purchased a general liability insurance policy that includes an endorsement for product liability. During the sale of a new food product, a customer suffers a severe allergic reaction due to undeclared allergens. What is the most appropriate course of action for the business under its policy? A. Ignore the situation as it falls outside the policy coverage. B. Immediately notify the insurance company about the incident and provide details. C. Compensate the customer directly for their medical expenses. D. Remove the product from shelves without notifying the insurer. Answer: B. Immediately notify the insurance company about the incident and provide details. Explanation: under a general liability policy with product liability coverage, the business must report any incidents that could result in a claim. Immediate notification to the insurer is critical as it allows the insurance company to assess the situation and potentially cover claims related to the allergic reaction. Option A is incorrect because the incident falls under the product liability coverage. Option C is not advisable without consulting the insurer as direct compensation could complicate claims processing. Option D risks non-compliance with the policy terms and may hinder the insurer's ability to assist. Question 5. A commercial auto insurance policy typically includes which of the following types of coverage? A. Comprehensive coverage for all types of damage, including theft. B. Liability coverage that protects against bodily injury and property damage claims. C. Coverage that is limited to accidents occurring within state borders only. D. Personal injury protection that covers the driver's medical expenses regardless of fault. Answer: B. Liability coverage that protects against bodily injury and property damage claims. Explanation: commercial auto insurance policies primarily provide liability coverage which protects the insured from claims arising from bodily injury and property damage resulting from the operation of their vehicle in business activities. Option is misleading as comprehensive coverage is a separate coverage type that addresses non-collision related damage. Option C is incorrect because commercial auto insurance generally covers claims that occur in any state where the policy is valid. Option D relates to personal injury protection, which is not standard in commercial auto policies and varies by jurisdiction. Question 6. What is the primary purpose of the underwriting process in casualty insurance? A. To establish the claims history of an insurance policyholder. B. To determine the premiums based on risk assessment. C. To facilitate the payment of claims efficiently. D. To enforce regulatory compliance among insurers. Answer: B. To determine the premiums based on risk assessment. Explanation: the underwriting process evaluates the risk associated with insuring an individual or business to set appropriate premiums. Underwriters assess various factors, including the applicant's claims history, financial stability, and risk exposure, to determine how much coverage should cost. Option A is incorrect because claims history is one of several factors considered during underwriting, not its primary purpose. Option C relates to claims processing, not underwriting. Option D pertains to regulatory compliance, which is a separate aspect of insurance operations. Question 7. A small construction company has purchased an excess liability policy. If the company faces a lawsuit with damages that exceed the limits of its primary general liability policy, what is the role of the excess liability policy? A. It will cover all damages regardless of the primary policy limits. B. It provides coverage for the amount exceeding the primary policy limits. C. It requires the company to exhaust its primary policy before any payment is made. D. It acts as a standalone policy that operates independently of the primary policy. Answer: B. It provides coverage for the amount exceeding the primary policy limits. Explanation: an excess liability policy is designed to provide additional coverage once the limits of the underlying primary insurance policy are exhausted. It kicks in to cover the additional liability, thus offering a higher level of financial protection for the insured. Option A is incorrect because it only covers amounts above the primary limit, not all damages. Option C is misleading as excess liability coverage generally requires the primary policy limits to be exhausted before it can provide coverage. Option D is also incorrect because excess liability policies are contingent on the primary policy's coverage. Question 8. In the context of workers' compensation insurance, which of the following is NOT typically covered under a standard policy? A. Injuries sustained while commuting to and from work. B. Repetitive strain injuries resulting from workplace activities. C. Occupational diseases caused by exposure to hazardous materials. D. Accidents occurring during a lunch break on company premises. Answer A. Injuries sustained while commuting to and from work. Explanation: workers' compensation insurance typically does not cover injuries that occur while an employee is commuting to or from work, commonly known as the coming and going rule. Coverage is generally limited to incidents that occur in the course and scope of employment. Options B, C, and D are covered under workers' compensation policies. Repetitive strain injuries and occupational diseases resulting from work conditions are compensable, as are accidents that occurred during breaks on company premises, as they are considered within the scope of employment. Question 9. Mr. Smith operates a plumbing business and has a general liability insurance policy. One day, while performing work at a client's home, he accidentally damages the flooring. What is the insurance principle that would apply to this situation? A. Utmost good faith. B. Indemnity. C. Subrogation. D. Contribution. Answer: B. Indemnity. Explanation. The principle of indemnity ensures that Mr. Smith can be compensated for the damages caused during the course of his business operations, allowing him to recover the cost of repairing the flooring without profiting from the loss. The indemnity principle aims to restore the insured to their financial position before the loss occurred. Option A. Utmost good faith refers to the expectation that both parties to an insurance contract will deal honestly and fairly with each other. Option C. Subrogation involves the insurer's right to pursue a third party for damages paid to the insured. Option D. Contribution refers to the sharing of loss among multiple insurers, which is not applicable in this scenario. Question 10. Which of the following is an ethical dilemma that an insurance agent might face in their professional practice? A. Adjusting premiums based on the insured's risk profile. B. Disclosing a client's claims history to another insurer without permission. C. Providing clients with a comprehensive review of their coverage needs. D. Referring clients to specialists for additional coverage options. Answer. B. Disclosing a client's claims history to another insurer without permission. Explanation. Disclosing a client's claims history to another insurer without consent represents a breach of confidentiality and violates ethical standards in the insurance industry. Agents have a duty to protect sensitive client information and act in the best interest of their clients. Options A, C, and D reflect acceptable practices in insurance. Adjusting premiums based on risk is standard underwriting practice, and providing comprehensive reviews and referrals for additional options are both ethical behaviors that enhance client service. Question 11. An insurance agent discovers that a client has provided false information on their application regarding previous claims history. What is the most appropriate course of action for the agent? A. Ignore the discrepancy if the client has paid the premium. B. Report the discrepancy to the insurance company immediately. C. Advise the client to amend their application before submitting it. D. Continue to provide coverage until the policy expires. Correct answer. B. Report the discrepancy to the insurance company immediately. Explanation. Insurance agents have a fiduciary duty to act in good faith and uphold the principle of utmost good faith, uberumi fide. When an agent discovers false information on an application, they must report this to the insurer, as it may affect the validity of the policy and the claims process. Failing to disclose such information could lead to policy cancellation or denial of claims. Option is incorrect, as ignoring the discrepancy could result in legal repercussions. Option C is misleading because advising the client to amend the application after the fact does not correct the issue of misrepresentation. Option D is also wrong, as continuing coverage based on false information jeopardizes the policy's integrity. Question 12. A worker is injured on the job and files a claim under their employer's workers' compensation insurance. Which of the following is not a benefit typically provided by workers' compensation insurance? A. Medical expenses for treatment of the injury. B. Compensation for lost wages during recovery. C. Pain and suffering damages resulting from the injury. D. Rehabilitation costs for returning to work. Answer. C. Pain and suffering damages resulting from the injury. Explanation. Workers' compensation insurance is designed to provide medical benefits, wage replacement, and rehabilitation costs for workers injured on the job, but it does not cover pain and suffering damages. The system is a no-fault mechanism that limits the employee's ability to sue the employer for additional damages. Options A, B, and D are correct, as they represent standard benefits under workers' compensation policies. Medical expenses, wage compensation, and rehabilitation costs are all part of the benefits provided. Question 13. Mr. Johnson, the contractor, holds a professional liability insurance policy. While executing a project, he makes an error that results in significant financial loss for his client. Under what conditions would his professional liability policy likely respond to the claim? A. If the error was unintentional and occurred during regular business hours. B. If the client sues for damages exceeding $10,000. C. If the claim is reported within the policy's reporting period. D. If the client has already compensated for the loss out of pocket. Answer. C. If the claim is reported within the policy's reporting period. Explanation. Professional liability insurance typically requires that any claims or potential claims be reported within a specified reporting period. This allows the insurer to manage and investigate the claim effectively. Option A is incorrect, as the unintentional nature of the error alone does not guarantee coverage. The claim must also meet policy conditions. Option B is misleading because coverage does not depend on a specific claim amount, but rather on the reporting and conditions of the policy. Option D is irrelevant because compensation from the client does not affect the contractor's right to file a claim under their professional liability insurance. Question 14. A business owner seeks to understand the difference between an umbrella policy and excess liability coverage. Which statement accurately describes a key difference? A. An umbrella policy can cover claims not included in underlying policies, whereas excess liability only covers the limits of underlying policies. B. An excess liability policy provides broader coverage than an umbrella policy. C. Both policies are interchangeable and serve the same purpose. D. Umbrella policies are limited to bodily injury claims only. Answer A. An umbrella policy can cover claims not included in underlying policies, whereas excess liability only covers the limits of underlying policies. Explanation. Umbrella policies provide additional coverage beyond the limits of primary insurance policies and can also fill in gaps not covered by those policies. In contrast, excess liability insurance only kicks in once the primary policy's limits are exhausted and does not cover claims outside of the specified underlying policies. Options B, C, and D are incorrect. Excess liability policies are more limited than umbrella policies, and they are not interchangeable since they have distinct functions. Additionally, umbrella policies can cover various types of claims, not just bodily injury. Question 15. Which of the following factors does NOT typically influence the premium rates for a workers' compensation insurance policy? A. The industry classification of the business. B. The employer's claims history and experience modification factor EMF. C. The geographical location of the business. D. The age of the owner of the business. Answer D. The age of the owner of the business. Explanation. Workers' compensation insurance premiums are primarily influenced by the nature of the business, the employer's past claims experience measured by the experience modification factor, and the geographical area where the business operates. The age of the business owner is not a typical factor used in determining premium rates. Options A, B, and C are all correct influences on premium rates, as they reflect the risk profile of the business in terms of industry standards and historical claims data. Question 16. A policyholder has an auto insurance policy with a $1,000 deductible for collision coverage. If they incur $5,000 in damages after an accident, how much will the insurance company pay for the claim? A. $4,000. B. $5,000. C. $1,000. D. $0. Answer A. $4,000. Explanation. In this scenario, the insurance company will pay the total damages of $5,000 minus the deductible of $1,000. Thus, the insurer will pay $5,000. $1,000 equals $1,000. Understanding deductibles is crucial as it directly impacts the out-of-pocket expenses for the policyholder. Options B and C do not accurately reflect the deductible impact, while option D is incorrect since there is a valid claim that exceeds the deductible. Question 17. A homeowner discovers significant water damage due to a burst pipe and files a claim under their homeowner's insurance policy. Which of the following factors may lead the insurer to deny the claim? A. The damage was reported within the required time frame. B. The damage was caused by lack of maintenance on the homeowner's part. C. The incident occurred within the policy period. D. The homeowner has a history of filing claims. Answer B. The damage was caused by lack of maintenance on the homeowner's part. Explanation. Homeowners insurance typically excludes coverage for damages resulting from the homeowner's failure to maintain their property. If the insurer can demonstrate that the damage resulted from neglect or lack of maintenance, the claim may be denied. Options A and C are positive indicators for the claim. Option D could influence the insurer's assessment but does not automatically lead to a claim denial. Insurance companies typically look at the nature of the damage and its causes before making decisions. Question 18. In Wyoming, which of the following actions would be considered an unethical practice for an insurance agent? A. Failing to disclose commissions earned from referring clients to specific service providers. B. Providing a detailed explanation of policy coverage and exclusions. C. Encouraging clients to review their policies annually. D. Offering a premium discount for bundling insurance policies. Answer A. Failing to disclose commissions earned from referring clients to specific service providers. Explanation. Insurance agents have a responsibility to be transparent about any commissions or financial incentives they receive from referrals. Failing to disclose this information can lead to ethical violations and loss of trust. Options B, C, and D represent ethical practices that enhance transparency and encourage responsible consumer behavior. Question 19. Under Wyoming law, which of the following is required for an insurance policy to be considered legally binding? A. A signed agreement between the insurance agent and the insured. B. Payment of the first premium by the insured. C. A verbal agreement confirmed by the insurer. D. Approval from the Wyoming Department of Insurance. Answer: B. Payment of the first premium by the insured. Explanation: for an insurance policy to be legally binding, the insured must pay the first premium. This payment establishes the contract and demonstrates the insured's acceptance of the terms. Option is incorrect because a signature alone is not sufficient without the premium payment. Option C is misleading since verbal agreements are not enforceable in insurance contracts. Option D is unnecessary. While regulatory approval is vital for the insurer, it does not affect the binding nature of individual contracts. Binding nature of individual contracts. Question 20. When evaluating a claim for property damage, which principle of insurance is invoked to ensure that the insured is not profiting from the loss? A. Risk retention. B. Indemnity. C. Utmost good faith. D. Contribution. Answer: B. Indemnity. Explanation: the principle of indemnity ensures that an insured is compensated for their actual loss but does not allow them to profit from the insurance claim. This principle is fundamental to maintaining fairness in the insurance process. Option A refers to the acceptance of risk by the insured. Option C relates to the duty of both parties to act honestly. Option D involves multiple insurers and how they share the loss, which is not applicable in this context. Question 21. Which of the following is NOT, a standard exclusion in most general liability insurance policies? A. Intentional acts. B. Employment-related injuries. C. Damage to property owned by the insured. D. Fire damage caused by a natural disaster. Answer: D. Fire damage caused by a natural disaster. Explanation: most general liability policies typically exclude coverage for intentional acts, employment-related injuries, and damage to property owned by the insured. However, fire damage resulting from a natural disaster is generally covered unless specifically excluded. Options A, B, and C represent common exclusions found in general liability policies. Question 22. A small business owner is considering a business owner's policy BOP. Which of the following coverages is typically NOT included in a BOP? A. Property damage. B. General liability. C. Professional liability. D. Business interruption insurance. Answer: C. Professional liability. Explanation: a business owner's policy BOP typically combines property and general liability coverage along with business interruption insurance. However, professional liability coverage, which protects against claims of negligence in the provision of professional services, is usually not included and must be purchased separately. Options A, B, and D are standard components of a BOP. Question 23. An insurance adjuster finds that a claimant has not disclosed the pre-existing condition related to their injury claim. What action should the adjuster take? A. Approve the claim as filed. B. Deny the claim outright. C. Investigate further and determine the impact of the non-disclosure on the claim. D. Inform the claimant that their claim is being processed. Answer: C. Investigate further and determine the impact of the non-disclosure on the claim. Explanation: an adjuster should conduct a thorough investigation to understand the implications of the non-disclosure on the claim. The adjuster must determine whether the pre-existing condition materially affects the claim before making any decisions regarding approval or denial. Options A and B are premature without a complete understanding of the situation, and option D does not acknowledge the issue of non-disclosure. Question 24. Which of the following scenarios would most likely be covered under a personal auto insurance policy? A. Damage to a friend's vehicle while borrowing it. B. Damage to the insured's vehicle while parked at home. C. Injury sustained by the insured while riding a motorcycle. D. Damage to the insured's vehicle caused by a flood. Answer: B. Damage to the insured's vehicle while parked at home. Explanation: a personal auto insurance policy typically covers damages to the insured's vehicle regardless of whether it's in use or parked, as long as the damages are not caused by an excluded event. Option A is incorrect because coverage may not extend to vehicles not owned by the insured. Option C is wrong because motorcycles often require separate coverage. Option D is typically excluded under standard auto policies as flood damage may not be covered. Question 25. An insured has a homeowner's insurance policy with a replacement cost coverage endorsement. if their home is destroyed by fire and the cost to replace it is $300,000, but the home was only worth $250,000 before the fire, how much will the insurer pay for the loss? A. $250,000. B. $300,000. C. $150,000. D. $0. Answer: B. $300,000. Explanation: with replacement cost coverage, the insurer will pay the actual cost to replace the home up to the policy limit, regardless of the home's market value at the time of loss. In this case, the insurer will pay $300,000 to replace the home, reflecting the cost to rebuild. Options A and C do not account for the nature of replacement cost coverage, and option D is incorrect as the policy provides valid coverage. Question 26. What is the purpose of the subrogation clause in an insurance policy? A. To prevent fraud in claims processing. B. To allow the insurer to recover costs from a third party responsible for a loss. C. To ensure that the insured receives full compensation for the loss. D. To require the insured to disclose any pre-existing conditions. Answer: B. To allow the insurer to recover costs from a third party responsible for a loss. Explanation: subrogation allows an insurer to pursue a third party that may have caused a loss to recover the amount paid to the insured. This process helps maintain fairness and ensures that the responsible party bears the financial burden. Option A relates to anti-fraud measures but does not explain subrogation. Option C describes the indemnity principle, while option D refers to disclosure requirements, which are separate issues. Question 27. Which type of insurance policy provides coverage for losses resulting from errors and omissions in the performance of professional services? A. General liability insurance. B. Workers' compensation insurance. C. Professional liability insurance. D. Property insurance. Answer: C. Professional liability insurance. Explanation: professional liability insurance, also known as errors and omissions insurance, protects professionals against claims arising from mistakes or negligence in their professional services. Its coverage is crucial for professionals such as doctors, lawyers, and accountants. Options A, B, and D do not specifically address coverage for errors and omissions and instead focus on general or property-related risks. Question 28. An insured purchases a personal umbrella policy with a limit of $1 million. If they are found liable for damages of $750,000 after an accident, how much will the umbrella policy pay? A. $750,000. B. $1 million. C. $250,000. D. $0. Correct answer: A. $750,000. Explanation: a personal umbrella policy provides coverage above and beyond the limits of the insured's underlying policies. Since the damages are $750,000 and fall within the umbrella limit, the umbrella policy will cover the entire amount. Options B, C, and D misinterpret the coverage limit and the nature of the claim. Question 29. Which of the following factors would likely not affect the calculation of a business's general liability insurance premium? A. The size and location of the business. B. The number of employees working for the business. C. The type of products or services offered by the business. D. The owner's personal credit score. Answer: D. The owner's personal credit score. Explanation: a business's general liability insurance premium is typically based on factors related to the business itself, such as size, location, employee count, and the nature of its operations. The owner's personal credit score is generally irrelevant in this context. Options A, B, and C directly impact the risk assessment and premium calculation. Question 30. Under what circumstances would a commercial property insurance policy cover loss or damage caused by a power failure? A. If the power failure lasts for more than 24 hours. B. If the power failure occurs due to a covered peril. C. If the business has a backup generator. D. Power failures are always excluded from coverage. Answer: B. If the power failure occurs due to a covered peril. Explanation: commercial property insurance may cover losses resulting from power failures, but only if the failure is caused by a peril covered under the policy, such as a fire or storm. If the power failure is not linked to a covered event, it would generally be excluded. Option A misrepresents the conditions for coverage, while option C does not guarantee coverage based on the generator's presence. Option D is incorrect, as not all power failures are excluded from coverage.